Do you want to leave a legacy for future generations? Do you want to save federal taxes? And do you want to know how the rich save so much in taxes? I'm so glad you can come out to figure out how this will work out. The Spendthrift Trust is legal, it's copyrighted, and it's also in the IRS Tax Code 643B. So many people have never heard of the Spendthrift Trust, and I want to teach as many U.S. business owners, U.S. 1099 income earners, and U.S. investors how they can save as much taxes as possible. The Spendthrift Trust comes from England way back when King Henry VIII, the famous king for chopping off his wives' heads, started the Church of England. He went to go tax the lords and ladies of England, and they went further back to history to the Magna Carta and its contract law. It came to the colonies while we were still part of England, and the law firm I work on behalf of inherited a trust that turned 350 years old in 2023. They've been saving taxes for more than 3 centuries. That's a long time. Our current tax code went into effect February of 1913, 111 years ago, and when it was only supposed to be around for several years. The very rich families of that time, the DuPonts, the Carnegies, the Kennedys, and the Rockefellers made sure they can continue to save federal taxes by putting into the tax code 643B. If the rich families can save taxes, I want to teach as many U.S. business owners, U.S. 1099 income earners, and U.S. investors how they too can save taxes year after year, generation after generation. Now, to give you a little bit of history about the Spendthrift Trust, the Benson Financial Spendthrift Trust was written by Paul Benson 75 years ago when he was a Harvard Law professor. In 75 years, the trust has never been audited. This is why they can give you a certification saying, hey, we'll defend you if the IRS ever asks questions, because they don't. The full title for the Spendthrift Trust is Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. All 5 elements you need to have to make this work correctly. Irrevocable, it goes from generation to generation. The Rockefellers Trust is called the office. It's 7 generations old and has almost 400 people under the same EIN or employee identification number, your tax ID number. Complex, the trust can hold money from day to day, week to week, month to month, year to year, decade to decade. Discretionary, whoever is the trustee can make the rules for the beneficiaries. Non-grantor, this makes the trust completely private. When you're going to have somebody who is not a beneficiary become the settlor, the person who starts the trust, and become the trustee for 5 minutes. Then they sign themselves away. This is not a speed bump. So if you can't find someone to do this for you, either myself or somebody else at the law firm will do it for you free of charge. And then the last element, spendthrift. This has gone in front of the United States Supreme Court on 2 different occasions. Both times the Supreme Court has favored the Spendthrift Trust. This is as legal can be. When you set up a 30-minute tax breakthrough session with me, I will give you 3 articles from Forbes magazine, 2 pages of case law. I will also give you information about the trust and a book called What the Billionaires Do. I want to teach as many U.S. business owners, U.S. 1099 income earners, and U.S. investors how they can save federal taxes just like the rich can. So let's get into this. The business trust is for all U.S. business owners and U.S. 1099 income earners. If you're an affiliate marketer, if you have a brick and mortar store, if you have an Amazon store or an eBay store, if you have a restaurant, if you are a landscaper, if you're a mechanic, you are going to save 3 figures, 4 figures, 5 figures, even up to 6 figures in federal taxes every single year. And then if you live in one of the 43 states that have state income taxes or personal taxes, you will save those too. This is a trust has been going on for centuries, and the Beneficial Spendthrift Trust will be 76 years old in 2024. To give you an example, a gentleman who I spoke to today who has a security company, even though he's missed the first 2 months of the year, January and February, we will save him and his company over $777,000 in 2024. That includes Ohio state income taxes and his taxes. Think of this. If he has this trust for only 10 years, he's going to save over $7 million in taxes. That's a lot of money. He can use this money to hire, to grow his business, to pay off his mortgage, to buy a new car, to pay off credit cards, to give to charity, to help a family member out. It is his money to do with what he wants. Now, the beneficial trust is for all investors. I don't care what kind of investing you're doing in the United States, you're going to save the following 5 taxes no matter what you're doing. Capital gains, short term are a year or less. So if you are doing tax liens, if you're wholesaling, if you're doing fix and flip, you're going to save between 10% to 37%, depending on your tax bracket, capital gains. Long-term capital gains are more than a year. So if you're selling your business, you're selling an investment property, or crypto for your health for more than a year, you're going to need save the long-term capital gains. Interest income. This is for passive investors, people who are doing the BRRRR strategy, people who are doing subject to real estate. I personally have notes. If you are a forex investors, you get taxed twice, interest income and capital gains. And if you're doing creative financing or seller financing. I just won a tax lien bid here in North Carolina for less than $5,000. I'm going to do seller financing. Someone's going to put $20,000 down, pay $1,500 per month per rent, and I'm going to save over $56,000 in interest income. Yay, Sally. Dividend income. If you're in the stock market, if you're a day trader, if you're doing commodities trading, if you're doing futures trading, if you're an options trader, listen up. Normally people are taxed between 10% to 37% depending on your tax bracket, but options traders, you get taxed 40% on your profits for a year or less and 60% on your profits for a year or more. You need the Spendthrift Trust. I just spoke to a gentleman on TikTok who is a day trader. If he goes with the Spendthrift Trust for the next 10 months, he's going to save $47,000. He can reinvest that into the stock market. He can pay off his mortgage. He can buy a new car. He can do whatever he wants with the money. Then rental income. Yes, you can take depreciation. Yes, you can take cost averaging, but a lot of real estate investors don't do that. If you have short-term rentals like Airbnb, vacation rentals or traveling nurses, or if you have 5 doors, 10 doors, 20 doors, multifamily, apartment investing, or if you have commercial property. Now, with rental income, I haven't told you the 4 ways you're going to save taxes, but I'll get to that in just a moment. But again, with rental income taxes, if you're doing arbitrage, either Airbnb arbitrage or rental arbitrage, you don't get to do cost averaging or depreciation. And finally, royalties. Royalties are for anyone who's an actor and actress, anyone who's in the NFT world, NFT crypto, NFT real estate, NFT artwork, anyone who's a writer, a musician. If you have intellectual property, because I sell the trust and it's copywritten, I don't pay royalty income taxes because I have both the business trust and the beneficial trust. I get to save thousands of dollars. Now, the 4 ways the Spendthrift Trust is going to save you money. It doesn't matter if you have the business trust or you have the beneficial trust. You're going to save federal taxes year after year, generation after generation. You're going to keep your information 100% private. There's a false rumor out there that your LLC or your S-Corp does this. Ha ha ha. I can go to the Secretary of State website or the Corporation Commission website of your state and research LLCs. 40% of all LLCs are sued every single year. You won't be sued with the Spendthrift Trust. Number 3, if you do get sued, everything's in the trust. They can't sue the trust. So if they try to sue me, the individual, I'm worth nothing. Everything I own is in the trust. I know I'm going to age myself, but if you remember O.J. Simpson, after he was acquitted for killing his wife and Ron Goldman, the Goldman family sued O.J. for $135 million. That went away as a frivolous lawsuit. Silly OJ broke into a Las Vegas hotel room and he actually went to jail for a few months. It did not affect his Spendthrift Trust. When he got out, all his assets were still saved and he still golfs 3 times a week. And finally, if you have the Benson Financial Spendthrift Trust, you will be exempt from doing the 2024 Corporate Transparency Act from the Treasury Department. If you don't know about the Corporate Transparency Act, listen up. If you're an established LLC, doing business as, or a corporation, you have until January 1st of 2025 to do the paperwork for the Treasury Department. If you start a new LLC, doing business as, or a corporation in 2024, you have 90 days or 3 months to do this. If you don't do the paperwork, you could be fined $10,000 and or 2 years in jail. Yes, you could go to jail for not doing the paperwork for the Treasury Department. That's crazy.